In today's video, I'm going to share with you 3 reasons why I'm overweighting Apple through APLY in the portfolio. So we earn over $100,000 per year in dividends at this channel, and our performance and value shows that we're up 47% for the year. 47%, the S&P is up 16, the Nasdaq's up 32, and the Dow's up only 5. So we're still up 47% even after the recent market decline, and that's because we tie all of our investments to the indexes. So if you fall as a result of being invested in the indexes versus being in stocks, you're going to fall a lot less. Yes, we have Yieldmax funds like Apple and Tesla and things like that, but they're a small percentage of the portfolio, so we don't fall too bad when they fall. So APLY is down 2%, and I want to take advantage of that, and there are 3 reasons why I want to take advantage of that. First of all, Apple is big in the AI space. We all know that. We made a video in the past on how Apple is going to dominate in AI, just like other top S&P 500 companies. So we all know that it's a huge player in the AI space, okay? That's the first reason. That's the obvious reason. But here's the second reason, okay? We'll go ahead and go with the chart, okay? Look at Apple on the chart. If we zoom in on APLY's chart, you'll see that, well, first of all, it has a nice dividend, okay? 28% dividend. I'm not sure what the exact yield is here because Yieldmax just reset all the dividends. So please let me know what the real dividend is in the comment section below. But 179 is Apple here, okay? And look at where Apple has pulled back to. It has pulled back to the 100-day moving average, that blue line, the 100. A lot of people might not like charts and think that charts matter, but look at how the charts bounce off of this brown line or the 20-day moving average, okay? Since March, we've been seeing exact pullbacks and tags and holds of the 20. So 20 here, here, all the way up until the top. You can see up in here 20, we tagged that 20 twice and we held it. Now we broke it. I added some when we hit the 50 on Friday, and then now we're down at the 100. So if we hit 160 or that excuse me, or that 200-day moving average, then I'm going to be buying even more Apple hand over fist. And here's why. Not just because it's an AI favorite, okay? It's going to take over in the AI space one day, not just because it tagged that beautiful spot on the chart, but also because it's a large part of the indexes. And look, 7% here for Apple for the S&P, and then look at the Nasdaq. It is 12%, okay? Excuse me, 12%, okay? Apple is. So that means that if I'm buying this in the portfolio, then I'm going to anchor my own performance to the index is even better now if I buy Apple, okay? So Apple, to me, yes, it's down and it's time to buy. Now, here's one thing you have to watch out for when you buy Apple, okay? It's maintenance, all right? So maintenance is huge at this channel. If we go to a trade chart of APLY, you'll see what I mean, okay? So to get all of the income that I get at this channel and the performance, I use a little bit of margin. So for every $1 you put in your account, you get, excuse me, $4 of purchasing power. Sorry, I was talking all night last night. $4 of purchasing power. See this $1 you put in your account, you get $4 of purchasing power here, okay? So I just use a small fraction of that, okay? A small fraction of that purchasing power to get more income and more performance. So this 200,000 that you see in debt here, I just added to it because I added 5,000 APLY this morning. Now, what you have to watch out for, and well, one more thing, when I have my 100,000 per year in dividends, obviously that'll pay down this debt in less than 2 years, and then my account will be plus 200,000, my debt will be at 0, so I'll be at 700,000 roughly, my debt will be at 0. None of this debt ever shows up on a credit check. It has cheaper interest than credit cards or mortgages. So I love the idea of using a fraction of margin, not using too much margin because that is dangerous, but using a fraction of your margin and using it with dividend paying securities that pay back your margin and qualify to banks for loans. Day trading does not qualify to banks for loans, and also 90% of day traders lose. So that's just a losing endeavor in the long run, in my opinion. Dividends always win. They always cash flow the investment, even if you lose. So APLY, I'm not concerned about in the slightest bit because it is the index, first of all, and it has a nice dividend. So it's going to cash flow the position over time anyway, in a short amount of time. But what you have to watch out for is the maintenance when you're running margin, okay? If you need help understanding how I use margin to live financially free out of my brokerage account, email me for my e-guides at akintalk48@gmail.com. I have e-guides on how to use margin, and I have e-guides on how to, excuse me, how to play Cornerstone Okay, and Cornerstone's one of my biggest positions. So 50% maintenance for APLY. Okay, that means that if I put 100,000 in APLY, 50,000 of my equity is taken up. Okay, 50,000. So that's kind of a lot. So you guys need to be aware of the maintenance for these Yieldmax funds. At E-Trade, it's 50%. At some brokers, it's 100%, and at some brokers, it's 25%. So if I bought 100,000 of APLY, that would take away 50,000 of my available withdrawal. My available would go from roughly 200 to 150. And as you guys know, when I'm running margin at this channel, you want to be able to withstand a 20% correction at least. Okay, so if you take my account value and you multiply that times 20%, okay, take this 500,000, all right, plus add in my 200,000 of debt. Okay, 500 plus 200,000. Okay, that's 700,000. Okay, 700,000. So 20% would be 140. 30% would be around 210. So I'm around 210 right now. I can withstand a 30% correction, but we're not worried about 30% corrections anyways because our dividends pay back our losses over the course of a year. So if we have a 20% correction in the market, but then we have a 20% dividend in Cornerstone here, then we break even. Cornerstone, 5-star fund. It is the index. It's where we get a lot of our performance. Last price, market price is 8.4. But look at the price paid, okay? 663, okay, 27% gain. It drips this 21% dividend down at this NAV. 663 for 27% gain, 652 right here for a 29% gain, 627, okay, 34% gain. So that's why Cornerstone is so special, and I have an e-guide on it because it's my biggest position in the portfolio. About 500 grand we have in Cornerstone, and it's a 5-star fund, as you see here on Morningstar, 5-star fund, and it beat the S&P over the last 10 years. So this is why I invest in Cornerstone, because not only is it the index, it's not only did it beat the S&P, but it has a 21% dividend that drips down at NAV. Okay, and it has 30% maintenance. Okay, Cornerstone has 30% maintenance. So I'll keep concentrating a lot of my money in Cornerstone because for every 1,000 I put in Cornerstone, only 300 is taken up. So if I put 100,000 in Cornerstone, only 30,000 of my equity is taken up. So that's the brilliance of Cornerstone, and that's the power of maintenance. So if you need help understanding how to play Cornerstone, email me for my e-guides at akintodd48@gmail.com. The key with Cornerstone is playing it around its rights offering. You have to time it around its rights offering. And I alert you of that rights offering here on Discord, my chat room, where we're over 200 members strong. And I'm learning a lot from all these individuals as well. We have a lot of great minds in this channel, in this chat room. And we have different channels here. My daily portfolio recap, Cornerstone rights offering announcement channel, everything you can think of, Yieldmax funds, life hacks, which we talk about a lot of great credit card information, how to, make the most out of your spending habits using credit cards. I mean, all kinds of channels here, okay? Day trading strategies, retirement, IRA, 401k, it goes on and on and on. So we're over 200 members strong there, like I said. And if we all keep working as a team and keep informing each other of these important updates in the market, I feel like nothing can stop us, okay? And the only thing stopping us from living financially free is the rights offering, I always say, because Cornerstone, we are making most of our money in Cornerstone living financially free because it pays a 21% dividend monthly. Okay, so I'm paying all my bills. A lot of this is tax-free because it's return of capital. All my bills come out of my E-Trade account. All my spending, when I travel the world, buy food, have bills, it all comes out of this available withdrawal number, even though I'm in debt. And Cornerstone is the best way to do that because it's the index and it has low maintenance. So that's the advantage of going with Cornerstone. But with Apple, I have to buy some APLY here because of that decline and because it is one of the largest holdings in the index. So you're going to really anchor your portfolio and get some nice income in the process. So that'll do it for the video, guys. If you like the video, click like or subscribe. If you have any more questions on how I get this performance out of my account, again, email me for my e-guides at akintodd48@gmail.com. And also, when you buy all of my e-guides, you get access to Discord, which I showed you. You get all those channels for free, as well as my phone number, so you can call me anytime you need me. I'll set you up and walk you through your portfolio to have it exactly like mine. So again, hope you enjoyed the video, guys. Leave comments in the section below if you have any more questions, and I'll talk to you soon. Thanks.